Hey Bulls, what's up? How we doing? Chase, ever bullish, the Stock Sherpa on YouTube, coming at you on a Sunday. This is a long-awaited Sunday recap. This is the most important video that I make all week, so I'm going to spend a little bit more time on it. Hope everybody followed some of the trades that I had last week. Hope everybody's having a good Sunday here. PGA is on. I got Mickelson in that one. But I don't have any time for fodder. Let's get right to it. This is a big Sunday, and I've got some big calls and some new trades to help you learn a little bit as well. And we're going to review everything, and then we're going to tell you where the market's going to go, and we're going to throw some nuggets at you while we're at it. So let's get in it. Let's get bullish. If you need a notepad, take a notepad. I'm going to start this with a little bit of a reading from my favorite book. This is or my favorite resource book, I should say. This is the Stock Traders Almanac. I have a link now. I became an affiliate on Amazon so that I can create a bigger presence as far as my search engine optimization goes. So the books that I've mentioned on a weekly basis, I'll just throw down in the link. And if you click on that, it'll throw me like 50 cents every time you buy it. But more importantly, it'll direct more people to the website. So throwing that out there. All right, so one of the quotes on today, market quotes, I think this is kind of cool. It provides some levity. It's an economist and diplomat from the early 1900s. His name's John Kenneth Galbraith, and he says, "The only function of economic forecasting is to make astrology look respectable." Well, John, we're going to come at you hard because that's not the case. We're doing it. We're finding correlations, and I'm going to get right to it. So everybody knows, if you're new to the channel, go to everbullish.com. You can follow along with this. You can screenshot, you can print, you can do what you need to do to have a hypothesis on the market this week. And my bulls already know what it is. So bulls and bull bays, pull it up and let's follow along. I'm going to throw some light on the market for you. Everbullish.com. I'm going to click on, this is looking pretty good here. We're going to click on investing articles. I just wrote this morning. I just put this out there. It should be published for you. So the newest article is today, the Sunday recap. I'm bullish on semiconductors, not semi-trucks. Had somebody think that, but I get it. That's actually not bad. Bullish on semis, EV, and oil, which is a strange combination, isn't it? Who would have ever thought we'd be talking about semiconductor parts, oil, and EV as the bulls for the week? But we are, and I'm going to tell you why. So again, straight to business. I want to twist the dagger on the market here at the end of the month. I'm up. Market's down or flat. And I know a lot of you bulls out there following me are up too. So let's keep this going. Let's get those profits real deep, and then we can trade around them and keep making money. Okay, so sector performance last week. We're taking inventory right now. We're going, what can I do to find out where stable ground is for the week ahead? Looking back at the week behind. So the week behind, funny enough, IT was the sell-off, the laggard the week before. And this week, IT was at the top. Communication services was at the top. So IT was up 2.8% and communication services was up 1.33%. Healthcare was up 1.16%. Discretionary, I mention this all the time. If you want to trade tech, you can also throw on and trade discretionary too. They're luxury items. So luxury items and tech always correlate very well. Behind that is real estate, staples, utilities, and then energies. So those were all finished in the green. The only things that finished in the red were financials, in materials, and industrials. So I'm big on bashing indexing, and I'm big on talking about why we should dissect the sectors, and here's why. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We had 9 sectors that were above the return of the S&P index, which was negative 0.43%. So how is it that we do that? Well, most people still think the S&P is an equal weight index. Remember that it's not. Tech is the biggest piece of the index. So what that tells us is if tech was the best, and tech is like 25% or something of the index, how badly did the other ones do and how much are they weighted? Well, financials are 11% and they were down. Materials are, we'll find out in a second, but a bigger percent, and industrials are too. So this is why sector investing is the way to go, especially for swing traders. I'm giving you the keys to the kingdom. Just follow. This is seriously good information, great information. It's going to make you a lot of money. Don't fight it. Go with it. Let it be easy. So that's the sector performance. And, some commentary on that. Remember, it's crazy that discretionary and tech were the laggards last Sunday. Looking back at the past week, easy does it on that one. So just take that in and go, hey, this is a good way to form a hypothesis on my trading going forward. All right, I'll get off my high horse. Oh, also note that energies and financials were down or flat, um, but not as much as the rest of the market. Financials were, but I won't even call that just because of the way that they're weighted. Okay, swing trades. Here's the deal. I'm going to keep going. ERX. ERX is still a crusher. I'm still as bullish as possible. If you're in it, keep in it. And I wouldn't add to the position. If you're not in it, go ahead and buy some of it. Energy is about to take off. And the hypothesis on that, oh, by the way, CPE, which is the other one I have here, if you're following along, CPE, Callon Petroleum, that was up last week pretty big. And I told you it would be, and it was. And that's the kind of small cap play on that. Let's buy the small companies that are super lean, and then oil prices go up a little bit, and then I make more than just the price that they went up a little bit. That's called leverage. That's what we do here. So, all right. And the reason I put this chart up here, I just pulled this off of Yahoo real quick. This is all about that correlation game that I like to play, that we like to play, which we have the chart going here. And we have, less than 5 days ago, oil was this is crude oil that we're looking at. These are the June 21 futures. It's the best way to predict the current price and price moves going forward. We're up at 67.5, and then on Thursday, we dropped all the way to 62, and then over the weekend, it has gone up, and it has gone up to 63.88. This is just real simple to me. We've hit these two highs here. We have a little bit of head and shoulders in the middle, and then we have this sell-off, and then we're starting to have a little bit of a rebound. If you're already in ERX, that should make you happy. If you're in CPE, that should make you happy. If you're not in anything, that should make you go, that's a pretty tradable chart. Maybe I'm going to get on it. All right, UWMC, we made money on that one last week. I'm still about that. All I have here is let's do it again. The hypothesis on last week still holds. There's also a lot of the trading Reddit army out there, and a lot of other people that are attacking the short squeezes. This is one of the most heavily shorted stocks in the entire game right now. The amount of margin, price, or I should say percentage borrowing cost to hedge funds and institutions that are shorting this are getting so high that the squeeze is coming. And nothing better than being on the right side of a short squeeze. It's fantastic. So UWMC, I like it. Those options I mentioned, those are up as well. You got to go to last week's video to watch that. Go ahead and like and subscribe if you like that. LabU, correlations don't lie, baby. I predicted in the 70s last week. We didn't get there, but we did pop up. I'm just going to throw that prediction out there again. This is just the simple rinse and repeat trade that we have going on there. If you're in it, I'm in it at I think I'm in it at 68.5, and then another lot at 75. We'll see the 80s sometime in the next couple of months. So I just see that as a great appropriation of capital. Ride, baby. All right. So yeah, I don't know if y'all can see here. I've got my background tuned up. I wanted to move some of the pictures that I had in my car now that I'm back living here now, and decided to move out of the Houston area. I wanted to bring some of the art that I have with me. I'm a big art guy, so hopefully y'all like that. But what I was going to say is that I also got a Lordstown Endurance, my favorite stock of the week, picture up here just off of the screen. And so Lordstown, this is going to be a big one, boys. This is going to be huge. Not sure which direction it's going to go. I did cash the options like I mentioned in my Friday video. I cashed one and I rolled it into a bad trading error, and now I got to manage around it, so we're going to work with that. But we all know, here's the big deal. Let's get right to what it is. On Monday, after market, they are going to have their earnings call. Their earnings calls always suck. They're not any good. They're not. They don't sell a lot of sizzle. They don't have a lot of fluff. They mentioned that we have the Investor Week or the Lordstown Week coming up here in June. Their earnings have been terrible. They've missed. We're going to find out how much cash they have on the balance sheet, which is going to be the biggest thing for me. But I want to do something a little bit different for you guys. So when you trade ahead of earnings, I'm already in it. And I know a lot of you guys are already in it too. And if you're thinking about dollaring down, this would be a risky play to dollar down right now. So instead, I'm going to propose a different idea, kind of like a smooth trade idea here. So we're going to tie the movement of whatever happens on Monday and early on Tuesday, or I'm going to listen to the call and potentially put out a video on how the call went. But so I'm already in, but I don't know if you are, or you have to be, or if you've decided how to manage around it. So I'm going to take the stock from the other day, the other week, which is Arrival. Arrival went down from 18 to 14. I told you to buy it somewhere in the 18s. We saw 20. I told you that it was still a hold at 20, and then it went down to 14 and a half, and then now it's back up. So this is why I said it's oil, semis, and EV. EV is, I believe the EV market, particularly the companies not named Ford, General Motors, and Tesla, are going to move. So goes the ride. They're all kind of in this basket, and I don't believe that any of them are remotely as well positioned as Ride is. But this will be a correlated trade. If you're a sports wagerer or a sports gambler, and you know what an if bet is, this is an if bet. So just to explain it, I put the numbers here. Ride is at 950. It went up to about almost 11 the other day. I bought one option when it was around 10, and that one went up. I cashed that option. I bought another one at 730. That was up almost 400%. I didn't clip it. I sold it at a positive 240%, and then I rolled it into another Ride option, and I clicked the wrong damn button. So egg on my face, but we're going to manage around that, and you still got a 50-50 chance of getting lucky if you believe in efficient markets. So with that, if you like Ride, but you're already in it deep, we're going to see what happens on this call, and I'm going to do kind of an if hypothesis here. So Ride's at 950, Arrival's at 1894. If the Ride call goes well on Tuesday, I'm going to bet there's a correlation between Arrival and the positive news in the EV space on Ride. So go ahead and buy Arrival, or take a look at it, or throw it on your watch list, or move it to your ready list, or throw a limit underneath it. This is a pro tip. This is a great, easy trade. It doesn't take a lot of creativity, and I think it makes a lot of sense for a lot of people. So, if the fish are biting, if they're biting on anything, it doesn't matter if you throw out a new lure, or maybe you catch even more. And that's what we're doing here. We're just retying the lines and throwing out a new lure to see how it goes. So I like it. And also, Arrival's up from when I told you to buy it, so get on that. Again, in sports wagering, this is like an if bet. If the Patriots win, that means the AFC is better. That means I'm going to bet on the team that the Patriots just beat to beat a team that's worse than the Patriots. Throwing that out there. I don't know if you followed. All right, I'm losing some juice. Goldman Sachs in FAS for swing trades. It's a financial play on interest rates. It's also a hedge to your portfolio. It's a way to pull profits out of a down market. Both of those were roughly flat if you look at my Friday video. But they don't scare me. I think that banks are going to make money either way. Banks are in the pocket of the easy money Fed, helicopter Fed we got going on, and it's just Jay Powell's going to just give it to us. So let this one be an easy trade too. I like FAS. I like Goldman if you're more of a hold kind of guy. I'm not throwing any options on that because FAS is already 3-time leveraged. And we can just scalp those this week. We can scalp them. We can swing them. I'm going to swing them. If they move against me, I'm going to hold them. If they go up, I'm going to sell them. All right, here we go. Let's dissect the S&P real quick. So we got information technology. What was that 2 weeks ago? It was 28% of the market. Now it's only 25%. That's tech. Healthcare is 13%. It was, 14 last week? Maybe even 15. Financials are almost 12, so we can see that some money moved in there. Energy is still only 2.85% of the market. So here we go. I'm going to hypothesize. I'm going to drill this into you. Do we really think that energy companies, let's think Exxon, let's think Chevron, let's think all of them. I don't know why I'm Oxy, Hess, all of these big time drilling companies out there that have multi-billion-dollar operations, trillion-dollar operations all over the entire world, pulling oil out of the ground for energy. They also have clean energy. They also have all kinds of, so these are energy companies. I shouldn't just call them oil. But do you think that those are really only representative of 2.85% of the overall market? They're not. And what happens is when people just systematically buy into index funds, particularly like the Vanguards and the Fidelities of the world, especially inside of 401ks, institutional flows in as well. They just cause this thing called herding. Herding is when all the money goes to the same place over and over again and causes a feedback loop, in this case, a positive feedback loop, and puts way too many flows into just one sector. So I think it makes sense to buy the sectors that are undervalued. All right, Bitcoin. Let's get to Bitcoin. Bitcoin sucks. I made a great trade. I'm going to toot my own horn. Bitcoin is now trended. And when I say it sucks for the current term. I'm probably going to buy it soon and have egg on my face again. But this is what traders do. You took agency over your own investment. If you followed what I said, you got out of it when I was at 48. I got out of SOS. I mentioned on Thursday I had to get out of it. I just can't stand this manipulation of the markets. And as much as I like Elon, he's just screwing me right now. I'm not going to take it. So that's why you should manage your own investments. I rebalanced the Ever Bullish 1 portfolio, the market beating Ever Bullish 1 portfolio, follow along newsletter portfolio that you can buy and implement on your own. And if you like it, you can buy it again next year. And if you don't, you got a good list of 25 stocks that are a lot better than what most investors would probably pick. I rebalanced out of it. I said that was the biggest holding. We made over 300% on the year in it. And then when it started to bounce around, it just said, look, let's fire this one and put something else there. So it's just to get at it right now. So I mentioned last week we were at 47. Right now we're at 33 in Bitcoin. We got out. We missed that loss. We took that money and bought something else that's going to make some money. So it just in the last 24 hours, Bitcoin went down 13%. If you go to Yahoo, it says, I just noticed today when I was writing this, it said Bitcoin at 35. Now it's at 33. Those letters are laid on it. That's how much this has been moving. So there we go. Put a little infographic up here for you. Earnings calendar. Lordstown's all I care about this week. It's on Monday. This is the correlated trade that I talked about. This is going to make or break a piece of the portfolio for us. If it makes it, we're going to keep in it and keep pounding that home. I said it before. I'm going to say it again. I think that the enterprise value of this company is well over $15. I think that if you just added up every bit of machinery and all the intellectual property that they have, they're at least $12 on the low side, 15 on the high side. That article, we shook that off like no big deal. When it came to the Wolf Research article that came out and just put it at $1, those guys are trolling. They're pulling an Elon with this stock, and I'm not going for it. So those are the trades. If you like, if we get good news or even good market reactions, and if we see any big block buys on Monday ahead of earnings, that's going to be big. Remember, I like to trade on Tuesdays, but I ain't against the Monday if it's something that I like. I'm already in, but you don't have to be. And if you already have right, you can buy a rival and still play the same game with it and not have the negative press. So I just see too much opportunity there not to scream it from the mountaintops for you. I'm pushing it for you. The Sherpa's taking you, baby. All right, let's get to it. Best trade of the week. Best trade of the week is SOXL. I mentioned this last week. This is a high-powered, it's a high throttle, high volatility trade based on the idea that tech is going to continue to do well, particularly the subsector of the information technology space, which is semiconductors. We talk a lot about these subsectors. The semiconductor space is, in my opinion, undervalued to the rest of the market. So let's go ahead and take advantage of that. I'm going to make this real simple. I don't think I have to explain very much. Look at this chart behind me here. This is very tradable. We're looking at 3 months. We've been up at 45. We hit 45 again. We've been down to 30s within 5 days. Let's call that maybe 10 or 12 trading days. We're back up at 39. We came back down to 30. We went back up to 42. We had a little cascade sell-off here. We established another bottom here. We do have a crossover as far as MACD goes. I'll take that for what it's worth. Those are always backwards looking, remember. But if I can confirm a hypothesis, I'm going to do it. Let it be an easy trade. So I'm going to let this be an easy trade. We had an up gap. When you see an up gap, there's a whole book out there called Up Gap Theory. It's very hard to find one. I'll try to find a link for it, but I got mine at half price books like 10 years ago. I don't even know if they still make it. But Up Gap Theory is a pattern type of trade that we're seeing here. Anyway, I just think SOXL is going to be up, and it probably hits 40 maybe this week or next, and it's at 35 right now. And it's also somewhere I want to be longer term, especially with this sell-off that we're seeing based on kind of some scaredy cats and some chicken littles running because the sky is falling as far as interest rate goes. I've said it before, I say it again. Tech is the backbone of innovation and technology. We have a very, very, very accommodative Fed policy going on right now. We have way more innovation than we've ever thought we'd see in this. We have, especially with the EV, clean energy space, and just computing in general. Everything is tied to semiconductors and technology, and it wouldn't make sense to be anywhere else if you're bullish. just on the long-term hypothesis of the market. And for short, medium, and long-term, I like SOXL. I'm going to leave it at that. All right. We're really rocking. I am compressing these. If you want to hold your advisor accountable, if you want to take agency over your own investments, if you want to buy a very well-seasoned and professional trader's thoughts and opinions on the market, $75, go to my website. I have 3 different portfolios. The Ever Bullish One flagship portfolio is all stock portfolio. It is a relatively tactical portfolio of the stocks that I liked at the beginning of the year, and then as they have changed and rebalanced through the year, we've made 2 rebalances. You can follow along with me and do that. It's beating the S&P 500. It's beating the crap out of all most of the most popular, if not all of the most popular actively managed funds. You're doing it yourself. There's no cost, no fee, no charge, and no moral hazard involved. If you don't like it, that's okay, but you're going to, and you're also going to learn how to trade and become a better trader while you do it. The dividend portfolio, I haven't done anything to. It's beating the market. It's yielding over 3.5%, and it's up on the market over it's 14.5 versus 11, so over 3.5%. And that's just sitting and chilling. I didn't even expect that. I just wanted to get you better yield in the market, and now we're beating that too. So that's a great one if you're older. That's a great one in retirement accounts because it doesn't kick off any income in the form of dividends. To a taxable account, that is. It still gives you the income. Finally, the Ever Bullish Balance portfolio is for the people in the middle. It's great for just set it and forget it retirement accounts. I haven't changed that one either. At the beginning of the year, I told you I could easily beat any balanced portfolio by just making a couple tweaks, and I gave you 2 of those nuggets. One was to use a better bond fund than the Barclays aggregate. We did that. We used a total bond fund. You got to buy it to find out what that is. And then we also used convertible securities because the convertible securities act like stocks when the market goes up and bonds when the market goes down. Don't follow what the dogma is. Traditional investing doesn't work. The investment industry is broken. Your advisor could easily tell you this if he knew this, which he probably doesn't. But if he does, he could tell you this, but that doesn't pay him to tell you this. He's got to put you in the managed product that won't do this and keeps everybody's money right there in the middle. It's silly. So get the net, jump on board, everbullish.com. Either way, you follow along with this, even if you're not interested in that. You can always just join the newsletter and get abreast of what I'm doing, and we're working here. This is going to work. This is something that is where the investment industry is going. All trades are discretionary. This is not to be considered financial advice. At the end of the day, you are the master of what you do in your portfolios. So this is just guidance on better ways to do it, especially for somebody who's made all the mistakes in the book. So anyway, that's the plug. Ever Bullish One podcast, everbullish.com. Follow Chase at Ever Bullish on YouTube, please. And all my bulls out there, hope that we're still crushing it, and I hope that y'all's portfolios are looking as good as mine is right now. Final thing, you stuck to the end. You are the best. Let's reap the rewards. This is the best option trade available. Talking about that semiconductor trade with SOXL. If you want to give it a little bit more gas, I like NVIDIA. NVIDIA is one of the biggest players in the space of semiconductor technology. They make all kinds of high-tech computer equipment as well as semiconductor equipment. So here we are. Trade of the week. September. These are the September 16s. NVIDIA is the company. The strike, I like it at $585, and you pay $62.70 for it. That was up 16% just on yesterday, or the last trading day, so on Friday. This momentum is turning around. I have a lot of commentary I can throw at that, but I'm going to keep this thing under 25. So thank you on that one. Go to the website, check that one out. Throw it on your watch list. If you want to buy it, buy it. For the aforementioned trades, I am very, very bullish. Again, I'm just going to say it off the top of the head. WMC just popped back into my head for some reason to reiterate that. If you missed that trade, it's still available. Let's do it, guys. Let's get rich. LFG, AFG, LGR, Chase at Ever Bullish. Hopefully y'all like my new office setup. I've been wanting to make this look a little bit more homey as well. And thank you again for being a follower. Love it. And let's get rich. Let's do it. Chase Ever Bullish, the Stock Sherpa Portfolio Manager on YouTube. The first, only, and best to do it. I'm out.